Well, we're certainly in a more uncertain and challenging investment environment, but that creates opportunities. And for long-term investors such as ourselves, that sort of opportunity is a positive thing. We are still very excited about opportunities in certain parts of Europe. Cities such as Berlin and so on believe they have a lot of growth. In North America too, cities such as Boston, in even Canada here, Toronto and Vancouver, very positive outlook. And then going over to Asia Pacific and more emerging parts of the world, feels like there's a lot of runway there too. So while we have a more challenging backdrop and certainly a more unpredictable and uncertain environment, very positive on parts of the world. And within our business too, I think that development's a big differentiator and a big opportunity. Buying core assets and investing in core product is challenging. Returns are compressed, cap rates are low. But where you can create new product and develop to core, I think that's a big competitive advantage and something we're very focused on.
Sure, I think the biggest opportunities will be in some of the emerging markets where we see health, such as India, where they've been able to manage their inflation. I think less in South America, where there's quite inflationary pressures at the moment and less demand. But I think some of the other economies, such as South Africa and Egypt, where we've seen slow but steady recovery, will be extremely important to the real estate market. And obviously, the United States, on a measured level basis, will continue to grow, and thus will have an opportunity for growth as well.
Right. So my answer to this question, and investment managers are asked that a lot, and the tendency is to try to think of something, a deal you've just done or a deal you're working on, and say that's the best thing because it's in your mind, it's what you're working on right now. And there are those examples in my mind. I'd be glad to share them with you in a minute. I think more important than the best opportunity is the best place to spend time. The best place to spend time, I think, getting ready for 2017 is really not at the deal level. It's at the portfolio level. We've grown these portfolios in property. They're now quite large. They're quite successful. But it's time to go in and clean house. Sell some things that are not going to be so great over the next 5 years. Move things around into buckets that you're happy with, and pay attention to whether those buckets are well balanced. There's a core bucket, there's a value add or a transitional bucket or a development bucket. Then there should be some money set aside for these shocks, these disruptions. And all three of those buckets need to be cared for and tended to. So there's not one opportunity that I'm going to just tell you, plastics, that's the place to go, or data centers, that's the thing to do. I think it's more subtle than that. It's more spend time on the portfolio construction and do it early in the year so that when that good deal comes along, you were looking for it, you were ready for it, and you're ready to step up and buy it and outbid everybody for it. Because if you don't do that portfolio homework ahead of time, you're not going to be able to do that.
That's a great question. It's a very low growth, economic scenario in nearly every investment venue across the globe. Low interest rate environment. Ones that are distinguishing themselves tend to be on the frontier. So some of the frontier markets, Indonesia, I hear a lot of clients mention more over the past year than ever. India has really popped into that limelight. I think investors are also looking at markets that had been very much out of favor, very much downtrodden, like a Brazil, and saying this is the time to buy, it's at the bottom. And they're starting to look at those markets because, quite frankly, all the developed and financial centers are priced to a premium right now, and many feel the upside of those is a little bit more limited. So you definitely have to go out the risk spectrum a bit. If I had to add a bit more, it's going into different property types. Not just markets. So we're seeing greater interest in things like self-storage. I thought the GIC, the sovereign of Singapore, just made a huge investment into the manufactured housing sector in the U.S., which is a first for that sector and certainly for a sovereign. And we see that across the world, people looking at the niche property types, medical office, self-storage, student accommodations, things like that.
So I continue to believe that regardless of what does happen with Dodd-Frank and regulation, that we don't have enough capital in the mid tier of the space. So this gap capital thesis is where I think the biggest opportunity is. People are worried about valuations, I get that, but the banks can only lend up to, say, like 50-55%, and people can't make money that way. So people who are willing to provide capital between 55 and 90, I think is the greatest opportunity today.